Hello and good morning. I welcome you to the morning meeting today on Wednesday, the 10th of January 2018. This is Jens Klatt speaking and exclusively presenting this format to you here for JFD Brokers. So we want to have a look at the markets and how things are going. In fact, some very interesting developments right now. So it took a little, unfortunately, when I presented these thoughts to the audience here in the German version of this format. The DAX presented itself a little unspectacular, in fact. So, in fact, I ended the event, and when I stopped the event, the market took off is the probably wrong wording. So, in fact, dropped more aggressively on the downside. Right now, pushing below 13,300 points, and probably we are not yet done here on the downside, in fact it already started overnight, I think, with the very surprising, I have to say, drop in the dollar Japanese yen, which pushed below 112 here. So probably it's kind of or the reason for this can be found here. Let's go over here in the dollar Japanese yen. So the reason for this drop can be found, or the acceleration, let's say, overnight can be found here, not just only in first losses we have seen here in the Nikkei. So the Nikkei lost, I think, something like 0.2, 0.3%, if I got these numbers right, if I remember them right. And usually this is already a first indication that, yeah, probably there's some further pressure to be expected. Then not just in the equity markets, in European equity markets, but also that Japanese yen can strengthen. Usually we have a negative correlation between those two. But it's also based on this first sign yesterday, which we mentioned already in the morning meeting. You may remember that I said that the Bank of Japan yesterday reduced their asset purchases by 10 billion. Or 20, it was 20 billion at the longer end of the yield curve, which was, or could probably act as kind of a driver here for further losses in the Japanese yen. Therefore, first of all, let's have a look here in a very interesting chart, which I want to present to you here. So dollar Japanese yen, for example, here, it was in fact, this is very interesting and something we remember. You may recall another chart presented to you. I'm not sure whether I did it on Monday, probably last Friday. I'm just getting a little irritated here, but I know that I definitely presented it to you. You may remember that I said there was a divergence between a red and the green line. You remember this? This was dollar yen versus the yield curve here, 10-year, and the differential here, the difference between those two. And I said, well, obviously, well, dollar yen needs to really strengthen and dynamically rose here. Even or if this doesn't happen, then a drop in yields here, which is currently happening. If such a drop happens, then this could weigh more heavily on the dollar Japanese yen, and that's exactly what's hitting the markets right now, I think. Probably induced by risk aversion. Let's see whether this is sustainable or not. I definitely hope so, since I want to add here that I'm currently short the DAX. I will just show you this trade. And I was already short yesterday, and I took another short today. So I really hope that the market will probably see some further dynamic on the downside here. But let's first of all have a look here at dollar Japanese yen and the 10-year yield. So probably this is the beginning of something bigger. And with the break below 112, this could also start to get interesting here. The yen, and you may recall this, I know I mentioned it in the morning meeting. I, again, don't know when, but I mentioned it definitely, that there was a quite strong yen short positioning here. And the commitment of traders report. We're not seeing a record short, but we're definitely seeing a market being quite extended here on the downside. And with this in mind, the performance of dollar yen in general was very, very weak. And with the break below 112, there's some further potential on the downside. And if risk aversion happens here, then the Japanese yen on a broad scale could see some bigger capital inflows here based on market participants, for example, reducing their carry trade exposure here in the market. And so with this in mind, here, this acceleration is definitely something which looks quite significant. The candle itself speaks a quite clear or gives us a clear message. The next target can be found around 110.80, 111. To be honest, again, I'm short the DAX right now, so if I want to be honest, and I'd really like to see risk aversion really hitting right now the market, I could definitely expect, or I would expect, dollar Japanese yen probably to push below 110 today. Well, why not? But this is definitely a long way to go, even though with here, the Dow Jones right now, being very extended on the upside. Same is true for the S&P. Also some very strange developments happening yesterday. So some might have seen that the S&P saw another high here, and another 52-week high, in fact, while the VIX spiked back above 10. So the volatility index here went above 10. And 25% of, more than 25% of all equities listed in the S&P 500 were declining, so we're on the loser side, and this was something which never happened in history before. I mentioned it during the German version of the morning meeting and mentioned it as a first potential sign that the market is about to see at least a smaller corrective move. And yeah, let's have a look here at the DAX, what's happening right now. So if we look at this chart, then you can clearly see, that's, by the way, I'm sorry, this is not a 5-minute chart, but it's one sec, it's a daily chart, and you can see the last candle, current candle here. So obviously the market is losing here, and yeah, so far I have to say that I appreciate a push towards 13,100 points probably. That's also something, by the way, which I mentioned already in several pieces before. That was a technical piece I wrote already yesterday, and as you can see here, the bearish divergence was something I mentioned in today's technical piece. For the DAX, it was only available for the German audience, but nevertheless, so that was one of the reasons why I took another short in the morning on my already existing one, which I took on a system base, by the way, yesterday already. And yeah, so right now I definitely hope that the market keeps on accelerating here on the downside, probably pushing towards 13,100, 13,150 points. It's in fact a long way to go, you might say. It's another 100 points, even though these 100 points are definitely, the market is capable of making it if really risk aversion hits. And so the only thing I will do right now is I will manage my stop here. So you can see that the stop is still here at this level around those highs, but I trailed the stop. I'm not sure whether I should do this right now or whether I should, why not? I mean, let's do it right here. I think I have some time, nevertheless. 360. So I'm trailing the stop here to this level and do the same here. So right here, you might wonder, usually I'm working with a mini terminal, so I haven't it open right now, which is one reason why I work that way. So now you can see here that obviously my stop was trailed to break even. So the entry price here at 367, 365. That was the one from today. That's the one from yesterday. So nearly the same price, 360 for both. And that's 100 points from the current levels. And then I will just see how the market develops here, even though I think / I hope somehow also, this is something I'd like to add here, I hope that we're not yet done on the downside, and there's a further potential of 100, 150 points. Would be a nice start into the trading year. So last week was already quite nice. So with some further gains today in my equity would be an even more attractive start into the trading year. There. So let's just see. Again, it was, or in fact it was, and this is the problem. So this is the chart I presented to the audience in the German version of the morning meeting, and it's exactly one thing what I was mentioning here, which I emphasized, where I said, well, you know what, the problem will be that if the market really pushes lower from here after breaking, that was, as you can see here, we dropped already lower, and broke the current intraday lows, respectively the lows here from Monday. And I said, well, the thing will be the question is, will the market really pull back after breaking this level and probably taking on some momentum on the downside? If so, yes, well, such a pullback could be shorted with a pullback here. So I worked with 13,300 points as just a rule of thumb here. And unfortunately, as you can see here, as mentioned during this German version of this format, well, have a look here. The market did not pull back, but in fact just sold off. So sold off sounds a little drastically, probably, but all in all, you can see here that the market starts to accelerate on the downside. And yeah, so all in all, what we can also see is that the market broke here this potential first target on the downside, and is now about to at least push towards 13,200 points, respectively. Again here, 13,150 to 130, probably this region. Let's just see. Yeah, I definitely keep you posted. So if you want, you can tune in tomorrow, ask a question regarding the trade. So I'm not really sure whether I want to keep this position longer than today. Probably I will migrate it, but this is a decision I haven't yet made. So definitely tune in tomorrow, 10:30 a.m. GMT, and definitely ask what happened to the trade. Probably I give you another update on this is how I trailed my stops so far, whatever. Let's just see. So yeah, that's it on the DAX then. We had already the thoughts on dollar Japanese yen. Let's go over to gold. There was someone in the German version of this format asking, so what about gold? And I said, well, I don't really like the fact that gold didn't dip below 1,300 USD per ounce. So from a risk reward perspective, I consider the region around 290, 95, respectively, probably 280, 85, very attractive for long engagements, since I'm definitely bullish for gold, also in the midterm, and I consider it to be likely that gold can push up towards 1,400 USD, probably even higher than that. The only problem is that even the mixed NFP data last Friday wasn't capable of pushing gold lower, even though gold is usually negatively correlated to the US dollar. And as you can see here, the US dollar saw a corrective move here against those lows, and gold was withstanding this push in the US dollar, which was already a sign that that gold is probably quite strong. And so that's definitely something you have to consider here. And now if we look at the hourly chart, what I said was that now I probably could imagine, even though I don't like it, but I could imagine to trade gold long with a break above 326 here, the highs which were marked last week on Thursday. That we go along with the break above that level, placing a stop here below 305, 306 USD per ounce, and then aiming for higher highs, which probably bring us up towards 1,360 USD, and probably even higher than that, up to 1,400 USD, so that we get to see similar developments as we've seen several times. So remember, for example, what happened here last year was also that was even a bigger pullback, but nevertheless gold kept on pushing higher before then seeing a bigger corrective move. Even that wasn't enough because we pushed higher from there too. And it happened several times that gold hasn't seen big retracements here, which is one indication probably that a breakout trade here is something you should definitely consider, since it's more and more unlikely that gold will see such a pullback towards and below 1,300 USD per ounce here. And let's have a look here at the euro. It's thankful. It's very thankful. So in fact, I was talking to the German audience here about definitely being a little careful of going aggressively Euro USD long against those highs, against 1950 or the region around 1950. We dig a little deeper yesterday here into this progressive move from the midst of December till those highs here, which were seen last week on Friday. But another thing is that I said, well, nevertheless, if someone wants to look at long engagements, probably probably it's necessary to wait for a push above this level here, 1980, 1975, 1980, and this is exactly what's happening here. So I definitely don't want to buy EURUSD here, but from this break higher, every retracement now, not sure whether it will happen, but probably towards 1950, 1955 is definitely worth considering long engagements, and could be that really the corrective move is finished here, and that we are about to see another leg higher and another more significant attack towards 121. One of the main reasons why I became skeptical about further US dollar strength was, by the way, that I said, well, if really risk aversion hits the market, and look at the equity markets right now, look at dollar Japanese yen. So it definitely looks as if there is a chance that this is based on what happened yesterday in the US equity markets. It's more of a really bigger move, or we are ahead of a bigger leg lower, let's say, that really risk aversion is right now hitting the markets. Because yesterday, again, the S&P rose while the VIX spiked, even though it was just small, but it spiked higher. And that was the first indication that the market is starting to get really nervous about also the current move on the upside in the US equity markets, which looks somehow ridiculous. I mean, we've seen gains over the first 6 trading days of the year with gains of bigger than 2%, which usually indicates another year of 2-digit wins here. In 2018. It happened 15 out of 15 times in the past. So, and with this really optimism building here, it becomes clear that probably there were 1 or 2 market participants saying, hey, you know what, I think we are about to see a bigger corrective move. And with dollar yen pushing below 112 and equities not following first place, but right now accelerating, it really looks as if we're probably about to see a more corrective move here, and that this could really be more significant. And with this in mind, usually you know that if really risk aversion then hits the markets, then you get to see a bigger demand on T-notes, for example, so US Treasury notes, which is usually driving yields lower. And what we've also seen is that one of the main drivers for this first corrective move after the NFPs here was that the yields started to bottom out a little. And this is the thing now. So yields are giving back all those gains of the last days. They weren't significant, even though they were there. And they were one of the main reasons why the US dollar could stabilize. And this is one of the reasons why here in the EURUSD then, we could get to see another quite significant push higher towards 121 and even higher. And this is also something, by the way, which is weighing on the DAX then, because the euro strengthening here is something which is not positive for German stocks especially. And yeah, so that's it from my end. Happy trading. Watch your stops, and talk to you again tomorrow again at 10:30 a.m. GMT. We also have the chance, or you have the chance, to tune in at 8:20 a.m. GMT with the DAX long or short. That's where we then will probably see whether there's a chance to formulate a trading setup here for the DAX. And that's it from my end. So talk to you again tomorrow. I look forward to it, and have a nice day. Happy trading. Watch your stops. See you, and bye-bye.